Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. And this morning we did have earnings out from Fortuna Silver. So wanted to walk you through the highlights of what Fortuna came back with for their first quarter results of 2023. The highlights, as you can see here, adjusted net income of $13.2 million, which came out to 5 cents per share, net income of $11.9 million for 4 cents per share, adjusted EBITDA of $65.3 million. Net cash provided by operating activities was $41.8 million, free cash flow of $8.5 million, and their liquidity as of the end of the quarter was $129.7 million. In the quarter, Fortuna also renewed their share repurchase program, which is good for up to 5% of the outstanding common shares. And in terms of the operational results, they had gold production of 60,092 ounces, silver production of 1.586 million ounces for a gold equivalent production of 94,110 ounces. The cash cost per gold equivalent ounce came in at $916 with an all-in sustaining cost of $1,514 per gold equivalent ounce. And a few other notes that occurred outside of the first quarter was, as I mentioned last week on a brief update on the show, they did acquire Chesser Resources for $89 million Australian, which has the Diamba Sud Gold Project, which helps them to expand their presence in West Africa. And as we've also been mentioning, they are still on track for their first gold pour at the Séguéla mine later on this month. Note here from Jorge Ganoza, who will be joining us on the show next week to talk about the first quarter results, as well as the acquisition and the update from Séguéla. And he mentions production and total cost per ounce were on plan, which resulted in the earnings of 4 cents per share and $8.5 million of free cash flow. Everything is on track still for first gold pour at Séguéla in May. And a note about the Chesser transaction is that it meets their strategic objective of expanding their asset portfolio of high-value opportunities in countries where we operate or near neighbors, and provides them advanced exploration in a mining-friendly jurisdiction in Senegal, one of the most prolific gold belts in the West African region. In terms of the financial results, the net income of 11.9 in the first quarter compared to 27 million in the first quarter of 2022, and adjusted net income of 13.2 was compared to 20.1 in the first quarter of 2022, with the decrease primarily coming to higher input costs across operations and lower operating margins at Yarrowoko and Lindero because of lower head grades, and lower sales of 6.7 million, which was largely a result of the lower silver price at 22.52 versus 24.18 last year. And the adjusted EBITDA came in at 65.3 million versus 80.3 million, again, because of the higher operating costs and lower sales figure. Net cash generated came in at 41.8 million of 14 cents per share compared to 33.2 million or 11 cents per share in 2022, with that increase being driven by negative changes in working capital of 10.8 million this year versus 27.9 million, and the lower taxes of 7.1 million paid on the lower EBITDA. And free cash flow was 8.5 million in this year's first quarter compared to 9.6 million in 2022. And that's based on a higher net cash generation, although offset by higher sustaining capital expenditures and brownfield explorations. At Séguéla, they have 22.5 million remaining in their 173.5 million total budget, which remains on time and on budget. And that money is going to be used to fund the remaining construction at Séguéla. In terms of the operating results, in the first quarter, they placed a total of 1.478 million tons of ore on the heap leach pad, average gold grade of 0.71 grams per ton, with estimated 33,510 ounces of gold, and came in with gold production at 25,258 ounces. That was 16% lower than last year, primarily due to a decrease in the head grade. Cash costs per ounce were 891 compared to 692 last year, which was a result of lower production and higher input costs due to inflation. And the all-in sustaining cost per gold ounce was $1,424 versus $1,038 in 2022. Taking a look at Yarrowoko, they produced 26,437 ounces of gold in the quarter at an average head grade of 5.94 grams per ton, which was a 6% decrease based on reduced operating time for planned maintenance as well as lower head grades. Cash cost per ounce was 819 this year versus 705 in last year's first quarter. And the all-in sustaining cost at Yarrowoko was 1509 versus 1147 in 2022. At San Jose, they produced 1.3 million ounces of silver, 8,231 ounces of gold, 4% decrease and unchanged respectively compared to the first quarter. Cash cost per ton was 86.66 versus 76.05 last year, and all-in sustaining cost was 1558 versus 1532 in the first quarter of 2022. And at Coahoma, they produced 283,000 ounces of silver, 9.5 million pounds of lead, 13.1 million pounds of zinc, with silver production being 9% lower, although in line with the mineral reserve estimate, while lead and zinc production rose by 4% and 21% respectively. The cash cost per ton increased 9% to 98.07 versus 89.60 last year. And the all-in sustaining cost actually decreased 3% to 17.29 per ounce from 17.83 based on increased silver production. So there are the results from Fortuna. Taking a quick look at the stock, we can see Fortuna is up 10 cents on the day, just under 3%. And we will have a call, as I mentioned, with Jorge Ganoza of Fortuna coming up next week to dig into the first quarter results, again, the Chesser acquisition, and also latest updates on the San Jose mine, which was reopened after a temporary suspension with a labor dispute, and the Seguela First gold pour. So stay tuned, and we will be back with Jorge next Monday, and we'll see you then.